Can you guys hear me? If you guys can hear me, identify. If you guys can hear me, identify. Can you guys hear me? Batting. It's batting. If you guys can hear me, quickly identify. No, I'm not talking to people on TikTok. I'm talking to people I'm having a class with. If you can hear me, just let me know you can hear me. If you can hear me, let me know you can hear me. But it feels like you guys can't hear me. It's showing me that I'm talking. Yeah, you guys can hear me, but the people on TikTok, the people I'm having a class with. I don't think they can hear me. They've muted themselves, all of them. How long do my class take? Oh, I just heard your voice now, but it's so low. All right. So basically it's going to be like in form of I'm coming. Let me talk to this guy. In form of teaching, and also it's going to be in form of breakdown. Now, this is Euro JPY on the 30 minutes time frame. Euro JPY 30 minutes time frame. Now, if you guys go back, I think one of the people I am very, 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 very proud of is this Abdurrahman, because when I woke up today morning and I just grabbed my phone to see how we broke down the entire course, like he's focusing on, he have watched the entire course, and even Jay, how they go back to that course, get new things and come back all the time is actually very, very impressive, and I love it. Now, if you see the breakdown he did, the only thing is that most of you are really, really used to get confused of the concept to use at a particular time. Seriously, I've noticed that. Now, the concept to use at a particular time, like, sorry, the model, why I told you guys the concept is one, which is SLK, but it has different models of how you can enter, how you can anticipate market direction, and how you can do different things. Now, the only way for you to get it right and clearly right is when you enter the market and you try your very best to make sure that okay, no. When you enter the market and you try your very best to make sure that you know the direction and you know exactly where to enter from. Now, my always information is that you can have the direction and you don't know where to enter from. You might don't not have the direction and you would have where to enter from. It happens that way. You have direction. WhatsApp audio. You have direction and you don't know where to enter from. And you might not have direction and you have where to enter from. Then days will come that you don't have direction and you also don't have where to enter from. And it's very okay. Days will come that you have the direction, you have where to enter from, but you are not sure of it. A lot of days will come like that. But sometimes the way you guys try to take a lot of trades is very discouraging. But the way you guys try to also communicate together and make sure you guys catch the move very well and make a lot of percentage is also encouraging. So my purpose, my topic of today is literally about RR. It's about RR. I want to talk to you guys about RR. Now, I don't want you guys to be going for 1:10, 1:11 unnecessary holdings. I don't want you guys to be doing unnecessary holdings. I hold trade, you guys know. Okay. Sometimes I quit very early. But the main thing here is anything above 1:3 is a very, very good result. Trading 1:3 doesn't make you less profitable. There's a saying I saw on TikTok that said, show me a 1:10 trader that has a Lamborghini. None. Show me a even 1:5 trader doesn't have a Lamborghini. If you look at all those people driving, all those crazy cars, all those supercars, at the end of the day, they are trading 1:2, 1:2, maximum 1:3. That's them. Some 1 is to 1.5. And those are the people that are making it far, far, far well in this industry. Do you know why? They're directly proportional. The higher your win rates, the lower your RR. And the higher your RR, the lower your win rates. They can't go hand in hand. You can't have high RR, high win rate. It's a lie. It's a bloody lie. Right? So if you guys are focusing on RR, all of you, then you have to make sure you have it at the back of your mind that okay, your win rate is going to be like very low. And it's cool. If you can trade 1 is to 10, let's say you can take 5 trades a week and you can going to win two, and each of them are 1 is to 6. It's very good. If you take 6 trades and win two, and each of them is 1 is to 6, it's extremely good because you end up in 8% profit. That's you focusing on RR, but you are not focusing on win rate. You've given up on win rate and you're focusing on RR. If you're not focusing on win rate, then you don't have to focus on RR. Trade 1 is to 2. I can, sorry to say I'm not bragging, but I can have 90% with it if I'm trading 1 is to 2. There's no fucking way market will tag me in and I will not see at least 1 is to 2 before it comes back. It's going to be very hard. GBP USD that we took a loss on Friday. How many? I saw almost 1 is to 3. I think Salman, you saw almost the same thing. We saw like 1 is to 3. Market came back and took us out. Market came back and took us out. So you see, so please, you guys should try and sit down and tell yourself. So if you are trading, you can either choose one of the two. You can't do both. You can't have IRR and a high win rate. No. Yeah, I know my win rate is very good. And my RR is also very good, but I'm average. It's not like I'm focusing on win rate or I'm focusing on RR. I close at 1 is to see. Let me tell you guys the truth of how I trade. Now, if I'm trading a funded account, I hardly hold more than 1 is to 3. If I'm trading a funded account, now everybody know I'm a funded trader, like 6 figures. Now, trading like 6 figures, or sorry, 7 figures, yeah, millions. Now, the truth is, whenever I'm funded, I risk 1% per trade, and 3% I'm done. In my 100K, 3% I'm done. If it goes to 3%, I'm closing, then I'm holding on my challenges. $3K payout is okay for me. And if I make 1 or 2 trades, I'm good and I'm okay. And I'm okay. Right? So you guys should, if it's challenge, me, I can hold 1 is to anything. Now the Euro USD you saw me hold was just because that account was a small account. It's a 25K account and it's funded. So I know, yeah, I'm not scared. I just risked $250, which is 1%, and I held through the week. And I did 2.5. That's 10%, clear 10%. It's even more than 10%. But when I'm in challenge, I can hold, I can do crazy RRs. When I'm funded, if I send you guys a screenshot of my Telegram channel that okay, yeah, today I made like 10R, 8R, I send one screenshot. The other screenshots I've closed in my funded account. Usually my challenges I hold. I can hold for as long as I can. Except if it's a small funded account. Because till today I have an 8K funded account I passed last beginning of last year. It's still funded till today. And I still receive payout of $150, $200, funny enough. It's funded. I don't have, should I throw it away? I cannot throw it away. I still need to use it and make money. I have 8K funded account, I have 5K, I have 15K. So all those small accounts I still use them, right? So basically, let's go back to our topic. I just decided to give you guys a highlight of all of you, because I see the trade you this guy hit break even J is not encouraging. BTC USD, if we have a tight stop loss, it should have gone to 1 is to 6. But okay, we didn't have a very tight stop loss. It went to 1 is to 4, and he was still trying to hold. And then the market came back and took him out. That's not encouraging, actually. It's not encouraging at all, right? So let's get back to the topic. So start from breaking down GBP USD. Now, if we all pay attention to GBP USD from the weekly charts, I'll start from the weekly chart. Or sorry, the monthly chart, which we've already started from. Now, the monthly chart I've already made the statement or said it. We have 19 days before the month end. Now, we've already analyzed the monthly and we have the belief that okay, the market is bearish. Market has already taken out this CRT high from the monthly time frame, and then we are likely going to take out this low. But regardless, we are going to be paying attention to what this killer. Yes, of course, yes. Now, If you guys have understood the teaching I've been giving you guys for as long as I've been teaching, it's your first option whenever the market creates a CRT should be you marking out the key level that was immediately created, which is this one. The market just gave the CRT. Before this candle come, you have to mark out this zone. Boom. This is your first option for entry because it's a new resistance that just got created. If you have a weekly break already, what I mean is you have this particular thing and you have a weekly break, your first option should be you marking out this zone. When you mark out this zone, that's when you now pay attention to what the market is going to do to this zone. And you, if you would have started selling from this zone and you've refined this zone to a continuation entry, you should have been in this trade already. Now we're bearish. We still drop down to the weekly time frame on GBP USD. Now, on the weekly time frame, GBP USD did a type of swing trade I used to take, right? Markets take out the high, right? Okay. Now give us a weekly break below here. After the weekly break, market immediately trade back into this zone and then taps and then started selling. Well, now this is another interesting thing. All of us know that this is liquidity, but let's mark this low. This one right here. This is liquidity. Market has taken out this liquidity and market has tapped on this weekly key level. Market has tapped on this weekly key level. This is not a daily key level. This is a weekly key level, right? Market took out this. Look at take out liquidity comes from here, extreme, right? Now let's just look at the entire move, the entire thing, the entire structure. Now the entire structure now is telling us a story that we have a sweep of liquidity here. We have a break of structure. Now GBP USD was in a previous uptrend. This is the weekly chart, previous uptrend, but then right here we have what? A reversal setup, which is an origin setup that we have a sweep of liquidity. Even right here, it's also a sweep of liquidity. We have a break of structure. We have structural liquidity, and then market taps on the key level and then give us a massive rejection and give us a confirmation to sell. Now, if you pay attention, what is this? This is an internal liquidity, as always, and the market has taken our internal liquidity, so our target is external liquidity. Regardless of that monthly confirmation and everything, market has given us a weekly storyline or a weekly advantage that is telling us market is going to take out this external liquidity. But right now, for this week, we are intraday traders. I'm not this thing. So market has rejected from this weekly key level. So we'll be paying attention to this weekly key level regardless. But then we give priority to the trend, and the trend I usually identify on the words on the 4-hour time frame. We are bearish. Market has tapped on the weekly key level. Then we pay attention to this particular zone, which is the nearest daily key level after the break that the market is likely going to pull back to before the drop continue. So before I change the time frame, before we continue the breakdown, we all know power of 3, yeah? So we're expecting a bearish week. That means it is okay if Monday, but Monday can give us a beautiful buy. Tuesday can also buy a little and then start giving us the reversal, or the change in state of delivery, which is the change of character can happen on a Tuesday, give us high of the week, then we can start selling on a Wednesday and a Thursday. Then we can sell down, take out this low, and then Friday can also give us a little buy. If you understand power of 3 already, you would expect it is not always correct, nothing is 100%, but you're actually going to expect that. So it's very okay if Monday can give us a buy, Tuesday a little buy, and then a reversal, and then Wednesday and Thursday can sell, and then Monday can buy. Now, regardless of the market tapping on this key level, let's drop to the daily time frame and see what we're seeing. Now, let me adjust my lines. That to scatter. Now, zoom in a little. This line here now is the line that we're expecting the market to pull back to, at least the pullback to come to this place before the drop we get anticipated. Then we have this and then this zone. Now, this zone is where the weekly key level got tapped, right? This zone is where, what did I just mark? Why did I mark that? Let me check. Okay, this is the monthly key level, yeah? This is the monthly key level. I just noticed. Now, that's the monthly key level. Now, see something. This place now is the place we are expecting the market to at least pull back to. We're expecting the market to pull back to at least this place. Now, market has tapped on this zone. Don't forget the lines are too much. That's how I normally analyze. But when I'm trying to place the trade, I delete everything and just place my position. Now, what's happening here is I zoom in the price action. Don't forget this is a weekly key level. Okay, let me do a little bit of writing. This is a weekly key level that the market taps. Now, this is a break of structure right here. Now, what type of liquidity did the market take out here? It's a transactional liquidity. And then if the market take out transactional liquidity, what do we expect? A retracement. Now the market is retracing. We expected this retracement since on Friday, but the market decided to disappoint us, took out and went to our direction. Had it been with traded Euro USD, we shouldn't be taken out at all. Say we shouldn't be taken out because the Euro USD did not take out that low and it kept on going high. But we chose the wrong pair, but it's okay. Now, this is where we're expecting at least the weekly to pull back to. Then remember, what is this? This is a redelivered rebalance, right? The market can still pull back into this zone, and then the sell is going to start from here. Now we know that okay, this is the zone we're expecting the market to at least pull back to this particular zone. I can delete this one because this redelivered rebalance is the word refinement of this. I can even put it back to this place. This is the redelivered rebalance, right? Now, regardless of that, now let's pay attention after tapping this weekly key level. What happened? What happened is that this is the low that the market take out, and this transactional liquidity. We're already expecting a retracement. All right. You come, I delete this one too. The noise is too much on the chart. Now the market come. Look at this. Take out this low. This is now a candle range. This one is an entire candle range, and then we're expecting the market to come to the high. Now this CRT low, this CRT high, bias type what? So now, market take out the CRT low, the CRT high, tap on a daily key level, which has been mitigated, but it got rejected again. Now, the market started pushing up already. Market break this key level because you can see that this white candle closed above this zone. So market has broken that key level, clearly telling us that, okay, you see the anticipation we made that, okay, the power of 3 on the weekly time frame, since we are buried from the monthly time frame, we can be bullish on a Monday and even likely on a Tuesday. So how do we know we can take a buy? That doesn't mean we are not going to hit SL regardless of how we analyze, right? Now, the first option as always when the market give us a CRT like this is for you to mark out this zone. Now we mark out this zone. We mark out this zone. We go to the 4 hour time frame now. We look for the confirmation for the buy. Now these lines we have anticipation for the sell, and these are our targets for what? For the buy. But we won't take profit here. We'll take profit here because this zone is already what looking dangerous. Now we switch to the 4 hour time frame. Now, when you switch to the 4 hour time frame, what's this? This is where the sweep happens. This is where what? The sweep happens. Now, apart from that's where the sweep happens. This line right here now is the open close from that higher time frame zone. This is your CRT target. And then this one right here is what? It's your delivered rebalance. Now, and this is the weekly key level here. This one is the weekly key level. Now, this line here is where we are expecting the buy to start from. We are going to refine it, but let's leave it for now. I'll delete this one, which is the CRT sweep. Now, when we come to this time frame, we'll notice that, okay, there's a break telling us that, okay, at least we can buy for the short term. We're not going to for a long term buy. But do you guys know that this type of zone is one of the best entry zones you can find in the entire industry? Where you're going to have a candlestick structure for a breaker block is one of the best entry zones I will give you. Now, do you know that the entire sale of BTC started from that particular thing, this particular thing I will show you guys? So many things I'm showing you guys that you guys can use to capitalize on. Just look, can you see? The entire zone of that BTC sale started from an origin like this. So you know that you should know, or you should have it at the back of your mind, that this type of candlestick structure on the 4 hour time frame is one of the most strongest zones in the entire market I've seen in the entire market, right? So regardless, we are bullish. We're not paying attention to that. Now, this is the zone sell can likely start, and also this is the zone buy can likely start. Now, if the market decides to come down tomorrow without taking out the high, right? Then I'll watch out how the market is going to consolidate a little, take out Asian low, and then I'll buy from this QM. Why? Because I cannot buy from here. If I go to the lower time frame, no, I'll make sure the market take out Asian low, and then the buy is likely going to start from this QM right here, and then you buy. But if the market decides to buy first before they sell, then this place is giving you the vibes of a continuation setup. You have what? An open close overlapping inside of an imbalance with liquidity. Now I'll show you exactly this type of entry I've been doing also. Look at BTC again. I look at the confirmation entry we used last week with same students right here. Look at it. This is an open close overlapping inside what? An imbalance with liquidity. So it's the same thing. So it's just you putting the market on repeat. You're not executing aggressively, especially a trader like me. I hardly trade aggressive. I trade aggressively, but not on this type of scenario. So I watch the market right here. Some type of confirmation I use is a 1 hour CRT. If I can find a 1 hour CRT after the market tap here, I won't even look for confirmation. I can enter manually. Or I'll just place my limit off of the new resistance that form if the CRT just form. And then I'll place my stop loss not above the CRT, but above the high here. And then we can continue our sell until what? This low. So this place is now a reference point for us to start looking for sell. And this one is a reference point for us to start looking for what? For buys. This is a very beautiful setup with an open close overlapping inside an imbalance with liquidity, right? And then this is a beautiful zone for buy if the market creates Asian low and then gets taken out. Now, this is exactly how I basically take my time to look at the pairs and expect what's going to come. Now, it's very hard for me to trade on a Monday because at the end of the day, Monday will usually try to change the entire move of the market and try to do something new, which is very bad, which I don't like, right? This is what GBP USD I'm expecting on GBP USD. Now, I didn't even look at any pair. I'm just trying to give the best of the analysis with you guys right here. Now, the same thing. Let's start Euro USD from the monthly time frame. Now, this Euro USD on my screen. Um, Look at it and pay attention to it. Now, this is a monthly key level that got rejected. After the rejection of the monthly key level, this is a very, very low probability CRT, which has unlike, had it been this candle is bearish, it's very okay. But this one is a very, very low, not low probability, very, very low probability or CRT. So I don't like it. The market rejected from here on the monthly time frame. Now, if you come to the weekly time frame, you see break type 2 and type 1 also. Both of them happen right there. Now, you see that, okay, this is where it's rejected from on the weekly time frame. This is where break type 2 happened and this is where break type 1 happened. Now, it is this week that the market break this entire zone. Now, you can see that there is no zone of rejection in the entire of what Euro USD. So you can also continue the swing sell off of what till you get to this zone on the weekly chart. Let's go to the monthly. Let me see where the sell can stop, right? Okay, let's put it at this point right here. Now, you can see now you also have another opportunity to cut you continue the swing sell. I've already taken advantage of the first move. I cut 1:13 on the first move. And then on the second move, likely is about to start. Now, the 4 hour break, the weekly break, the monthly reject monthly, the weekly break, and then we're bearish on Euro USD also. Now, what can likely happen? Nothing is always 100%, but we try our very best to make sure that, okay, we have something to, yeah. So now market come, give us a break below this zone. Now we'll come to the daily chart. Now, not just that, on the 4 hour time, on the weekly time frame, market can likely go back to this zone, right here. This line I just drew, or even this zone. This is what we call what KLR, because the market has already broken all the key levels. Now we start anticipating where the continuation setup is likely going to come from. This is something I've been doing. This is something I've been doing on repeat, right? Now we quickly drop to the daily chart. Now, when I drop to the daily chart, I'll start looking for reference points, different type of reference points on Euro USD. Now, this is what Euro USD did. This is what Euro USD is doing. This is the line for the break. I'll delete. Now, we have this line right here, which is like, now, so we are expecting Euro USD to go back to, which is very difficult. Why? Because Euro USD doesn't have any gap, any fair value gap, nothing. But Friday, I'll quickly go to the 5 hour time frame because I can't see anything interesting on the daily. So I'll go to the 5 hour time frame and we'll do a little thing with you guys. Now, if you pay attention, we right here. This is more like an origin setup in which we have a sweep of liquidity and a break of structure and then everything. And then here comes another block, like everybody used to see. Now the market tapped on that 4 hour key level, and that this is where the Friday buy started from. Because we all have our anticipation based on power of 3. We are supposed to be looking for a buy. The market took out the low, targeted the high, which I've already broken down yesterday for the people that attended, right? So the buy gave us. Can you see that the market did not take out the low on Euro USD? GBP USD just decided to manipulate that out so that we'll not make money. But it's cool. We have our anticipations correct, and it has always happened like that. So right now on Euro USD, we're bullish, right? on the daily from the daily chart, because you can see a 4 hour break already from the daily chart. I don't know. I can't see what feels like we're bullish on the daily, but we're bearish entirely. We are bearish, but for now we're bullish because this is the key level. It has been mitigated. I can't see any key level that the market is coming from. Rejection from here came rejected from here again. I don't really like double rejection. If it's a key level has been used, it has been used. So I can't say anything confidently with Euro USD. All I know is from the weekly time frame, we are bearish. Simple. I know I'm bearish on Euro USD. So we'll look forward to a zone where we're going to continue our sell from. It can be this line, anything above. Then we can anticipate that, okay, we're likely going to be looking for sells for some reasons, right? We are going to start looking for sells for some reasons, right? So basically, the only thing I can say is GBP USD is bearish, Euro USD is bearish. Now, let's do something about swing trading. If you remember during my classes with you guys, I taught you guys something we call KLR, type 2. Pay attention. Now, whenever you have liquidity, an obvious liquidity above a key level, whenever you have an obvious liquidity above a key level, you can refine it into a continuation setup if there is around that zone for you to take an A plus setup, especially if it is a liquidity overlapping inside an open, sorry, yeah, a liquidity below or above an open close. This is an information I would give several times. That's the swing I took on NZD-USD. That's the same swing I took on GBP-USD. Now, this is GBP-JPY. This is the GBP-JPY on the monthly time frame. Now, if you look at GBP-JPY entire price action, we know that we are bullish. But around here, something incredible happened. This liquidity, market took out that liquidity and tap on this zone. Now, we cannot make any conclusions based on this for GBP-JPY. So we'll drop to the time frame. Now, look at what I've taught, what I've sang to all your ears. Whenever the market take out liquidity and tap on an open close, reversal is likely going to happen, right? It's not compulsory, it's likely. And then I saw this thing, but why I didn't take advantage of entire move, this one, is because the liquidity was too far away. Remember, whenever you are trading, liquidity need to be close to your entry, or you wait for the market to engineer liquidity very close, 1 or 2 candles away, pull back to at least 50%, making it high probability. See, when I say something is high probability, I don't mean that thing is invalid. I mean it's valid, but for it to be high probability, there are some criteria. Before you say, Dr. FX, say, I did not see. It's okay for you to trade even if liquidity is from heaven and your entry is at earth. But it's valid, yes. But for it to be high probability, it needs to have that particular thing. For me to have the confidence of executing, I need an imbalance, I need liquidity very close, I need so many things for me to say, yes, this is high probability. But yeah, this is how I swing trade. Yeah, market come pushed off of this, open close, and then this liquidity. Regardless, we'll also pay attention to where the market was coming from, which is this low. Market got rejected and broke above all the key levels. Now, short term we're bullish, short term we're bearish. We'll go to the daily to see if we can make any conclusion because it's looking like we're bullish and it's also looking like we're what? We're bearish. Now, talking about the swing trade, come pay attention to this zone. Pay attention to this zone, the entry zone. Where should you have entered from? If they ask doctor, oh, doctor, where should I have entered from? I'll say this zone. This zone is now going to be refinement of the weekly. Then I'll pay attention to this zone as liquidity. Now, if the market should have come to this particular zone, then I would have sold from here. Whoa. Can you see? This would have served as my liquidity, and then I would have sold from here. That is just the refinement. If I wanted to have swing trade, this is exactly the same thing I did on Euro USD. It's not like I'm doing magic or anything. It's the same thing on repeat. It's the same thing on repeat. The market will keep doing this thing back to back. Now the market rejected from here. I would have done at least 1:6 because this is liquidity, and then this is the entry, and your stop loss is just going to be above here. This is like 1:6 already, and you can see the way the drop happened. The market turned around and the drop just started. Now let's go to the breakdown on GBP JPY. Right now on GBP JPY, I don't have any say. I don't have anything to say what the market is likely going to do, what the market will do. Now, this is a daily reject daily. We know that one because there's a daily key level right here. So it's a daily reject daily. And upon dropping, pay attention, upon dropping, The market has already broken this key level and this key level. What do we pay attention to KLR? Right now, we're now paying attention to KLR. How do we look forward to, okay, continue to sell on GBP Right now, GBP is bearish. All right. You can drop to the forward time frame. Look out for your break. Oh, you have a break already. And the market has already dropped a lot. And one of the most difficult things, sorry to say, for GBP to do is you expecting GBP to pull back a lot. Now, lie gone. GBP don't pull back a lot. GBP don't pull back a lot. The pullback on GBP is very small and it's very little. So it's going to be difficult. But then remember one thing, it says when you're doing your analysis that if you have a daily storyline, if you have a daily bearish storyline, 4-hour bearish key levels are likely going to hold. And that's when you start using your brain. We're already bearish. Okay, we know we're going to sell for some time to like around the zone. The next daily key level is like around here. Okay, how do you take it? The only for me to take a confidence setup is when the market is going to pull back to this zone. Remember this type of zone, a break of structure, liquidity, the sell. Yeah, that's my own confidence. If the market can pull back, well, it's too much. For the market to pull back here tomorrow and then the drop starts, it's going to be very hard, right? So basically, you pay attention to all 4-hour sell key levels, and then you see what the market is likely going to do. Now, disclaimer is not everything I say is correct, but you can see the confidence I used to gather and like post a move before the move comes. I post it on my TikTok before it even happens. Go and check, and then after you check, go to the price action of that day and see what the market did. I have more than 85% rate on the trades I post on TikTok. Because for me to post something on TikTok to say this is what I'm expecting, it's not like anything. It's like I've seen the A plus because I don't want to come and disgrace myself normally. Yeah. You must see something that is so sure for you to say, okay, this is what's happening. Now, let's say we noticed the sell right from here. Let me remind you guys how to enter the market if you understand structure very well. Now, this is where the break happened. This is where the market taps. Immediately after the tap, remember there was a sell I took on Euro USD 2 weeks ago with you guys, my lifetime mentorship guys, when I was writing exams. And I told you guys that pay attention to the 4-hour CRT on EU. How many of you guys can remember? I said you guys should pay attention to the sorry, mistake on EU, right? And you guys pay attention to that move on EU. Look at the rejection. What happened here? Market quickly gave us this CRT. Quickly on the 4-hour time. Can you see? After the daily rejection, the market gave a 4-hour CRT. Now, my mentor taught me how to enter this way, but I don't like it. He taught me how to get a rejection off of a daily and a 4-hour CRT, a rejection off of a weekly and a daily CRT, a rejection off of a 4-hour and a 1-hour CRT, and I execute. But I don't like it. But I did it with you guys the other day on EU. Remember? Salman took the trade. I remember. Right? The market gave us a 4-hour CRT, and your first option, as always, should be the new zone that got formulated. Then you can drop to the 1 hour and the 30 minute for you to refine and look for the best entry. And then that's when you can refine to the extreme. Why are you refining to the extreme right now? Because this is an origin setup. Am I correct? Yes, we have a sweep of liquidity right here. We don't have a break of structure right there, but we have this inducement very close to it. Remember our confirmation entry? This is a daily key level. Then you start to sell from here. Okay, yeah, you're so excited. The next thing happened. This time around, we have a sweep of liquidity right here. We have a breakout structure right here. Then we have inducement created very close to it. And this time around, we have a candlestick structure for an origin sell. Boom! Again and again. You have two beautiful fucking cells. Two beautiful fucking. Okay. Now you entered one position right here, which is your first position. You entered off of this zone. Your second position, you entered out of this zone. This is your third position. Okay, you have a sweep of liquidity right here. You have a breakout structure right here. You have inducement right here, and you have your third entry, A plus. Boom. Oh, you missed the sell, you enter here. You missed the sell, you enter here. Now, let me tell you why it's funny, these three entries. If you go to the 4-hour time frame, each and every one of them is a refinement of a 4-hour key level. Now, that's how you enter the chart. If you have a daily berry storyline, all 4 hour bearish key levels are supposed to hold. It's not compulsory, it's how we anticipated. And then since you have the bearish move started, okay, let me delete this. Let's say you just on the 4 hour time frame. You come, the market hit the daily key level, and then you have this bearish. Okay. First of all, you have this key level here. You have this new 4 hour key level here. Why am I marking them out? You have this new 4 hour key level here. Why? Because these are bearish key levels. We don't expect this buy key level to hold because we are bearish until the market take out this low, right? And on the daily, we are bearish, for example, until the market, like let's say the market come and take out this low. Okay, now you want to sell. You're looking forward to how do I sell this? Oh, doctor, how do I sell this market? You pay attention to all those 4 hour key level. You drop down to the 1 hour or the 30 minutes. Then you start refining. Okay, now your first refinement was this one, the origin cell right here. You enter from here. Your second one, you didn't have a refinement, but you have this zone. Your third one, the refinement was just exactly at the spot. And then the fourth one was just this particular zone that the market came into. But this zone has been mitigated. Now, these are 3 entries. Each of them have the break, or each of them have my 4 criteria for entry. I didn't see this. My execution last week was Euro USD sell by 1:13, and then my BTC buy 1:4, and then my loss on GBP USD. Those are the 3 trades I took. I didn't see this, but I'll tell you one of my students took it, and I will show you guys on WhatsApp. He sent it to me. Wallahi, one of my students took it, and he's in my general class, not lifetime, no one, just general class, and he took the sell. Now, this is liquidity, sweep liquidity, everything. Another origin setup liquidity. Now, this liquidity that you used to enter from here is now serving as liquidity, your sweep of liquidity for this next one. And then this one is now serving as your liquidity, then you sell. Now, you have 4 beautiful cells. 1, 2, 3. This fourth cell. This is a 4 hour key level. You're refining it down. Let's go to the 30 and you see how you're going to use it to enter the market. Now, if you're refining this zone, where are you going to enter from? My setup all the fucking time, which I've always shouted at you guys to really understand, is this. The open close, overlapping inside an imbalance. Can you see it? And then liquidity. This is where the sell is going to come in from. And what? It's a miss. Because if you're paying attention to this is an A plus move, which is the market came. The market just took out the inducement and then the sell started. What is an A plus entry? Why? Because you refine the 4 hour time frame. And then some of us are going to be like, doctor, this other block traders, other block is part of our concept. Why this other block is not going to hold is because it's not going towards the direction of your buyout. And that's why your buyout needs to be your priority all the fucking time. You make sure that, okay, your bias is always and always your priority. Don't pay attention to any other thing if you don't have a bias. Know where the market is going to go to. If you pay attention to where the market is going to go to, boom, you enter. And the market will do the same thing over and over again. All right. The last advice I'll give before the class ends in 1 minute is I tell you, if you want to learn this market, first of all, get a working strategy. May nobody deceive you. No, don't jump from concept to concept. Of course, yes, don't jump, but make sure that concept you are sticking to that is giving you that losing streak is working. If it's working, then you're good. Secondly, make sure you are doing everything the right way. You master it, then you lock in. Kawaii. That's how it's supposed to be. When you see your first cell coming from this zone, your second cell coming from this zone, your third cell coming from this zone. And this is my best. See, regardless of all this, the first one and the last one are my best. I prefer them. I don't like entries like this. But you see this, I can risk my house on this. My cars in my house, I'll risk it on this. Right? This one, right? So these are the breakdowns. At least GBP, JPY, Euro USD, and GBP USD are all bearish. We'll stop here for today because, normally try to give 1 or 2 breakdowns. You can continue joining me on TikTok, guys. If you have a question, you can forward it to the Lifetime group. So right now, I'll just ask questions I'll answer questions on TikTok. And yeah, you guys can join me also on TikTok. Yeah. Thank you all for joining. We'll have more breakdowns like this. And yeah.